Hey everyone, welcome back. It's Jonathan here. It's April the 5th now. We just got our report in, and it shows the numbers of March that just passed, so March of 2012, and I want to compare it to March of 2011 to see where we stand in the real estate market, and to keep you up to date with the market activity right now. As I said, the numbers came in, and obviously we are again up this year relative to last year. Last year in March, we had about 8,900 sales, and this year in March we had 9,600 sales. So almost 1,000 sales more this year than last year. We're up by 7.8%. The average price this March relative to last March is up by 10%, 9.9%. We are at an average price of $501,000 in the GTA. Again, that incorporates every house, small, big, a house that's perfect and a house that needs work. It incorporates all that into that number. Also, the days on the market are 23 days now. The average last year was 21 days. So last year, I guess they sold a little bit quicker than they are now. However, being out on the field every day and seeing the way it is, I've never experienced the market the way it is now. In the sense that, I guess you can call it a seller's market, in the sense that as soon as a house goes up for sale, if it's a good house and it's well priced, it sells relatively quickly. I'll just give you an example. I sold two houses last week. One of them sold in a day for 99% of the asking price, and another one sold in 3 days for 111% of the asking price. It actually sold for $51,000 over the asking price. The reason this is happening, again, is because there's a tremendous amount of buyers out there. And the reason there's a tremendous amount of buyers out there is because the interest rates are so low and your monthly payment is very attractive. So buyers want to get in now because they have this perception that the market is going to continue going up. And if it continues going up, they'll never have a chance to get in it. Also, they have a perception that the interest rates are so low, they're historically low, and that they too will undoubtedly go up. And once they go up, their mortgage payment per month will be higher as well. This is the same story. It's been like this for the last, I would say, year, and it'll continue like this. Just to give you a heads up, it'll continue like this as long as the monetary policy remains the same. Interest rates is low. Minimum down payment on a house is 5%, which is not that much money. Until those things are changed, the market will be strong like this. Houses will sell for fast. There will be consistent multiple offers on properties, as they have been now, and that'll go on for as long as interest rates stay low. However, I have heard through various sources, mortgage brokers, and people that work at the major banks, that some of the changes will be made. I don't know when, but what I've heard is, for example, that the minimum down payment will go up to 7% from 5%, and that the amortization rate, meaning how long it takes you to pay off your house, will decrease from 30 years to 25 years. So obviously this will have less buyers in the market because they won't be qualified for these changes. They'll have to look for something a little bit cheaper. Now, if there's nothing cheaper out there, then sellers have to reduce their prices. Once the sellers reduce their prices, then the market starts to correct, because the buyers and sellers start to equal out, and buyers can go out there and negotiate for a price. Until any of that is done, guys, I'm telling you that the market will stay the same, in the sense that houses will sell for fast. If you're a buyer, you have to act quickly. Use your real estate agent. If you have one, if you don't have one, call me. Listen to them carefully, and sort of do what they tell you, what they advise you to do. Obviously, be cautious, but you sort of have to move quickly. That being said, again, not much has changed. The average price is still high. It'll probably, it might go up a little bit more, but I think it will plateau the rest of the year. And it all depends on what regulations we have, what monetary policies are changed to in the future. So I don't know what they'll be changed to, but as long as they stay the same, so will the market. So that's my input for this market, and we'll talk next month about how we're doing. And until then, take care, guys, and we'll see you soon.